In today's video, I'm going to teach you a simple volatility 75 index strategy that you can start using today and make money in the market. Now, for most people, when they try to use the RSI, they try to use it in a way of trying to buy and sell whenever the market is overbought or oversold. And let me tell you today that this strategy doesn't work. Why? Because you are going to see that most of the time when the market hits an overbought zone and you are expecting the market to reverse, the market usually doesn't reverse from those zones, and it will repeat touching these overbought and oversold zones, and the market will never be reversing. So if you are trading either with an EA or you are trading manually, you are probably going to lose a lot of trades in a row, because you can see that on all this trend, right, the market was always going to the oversold zone, but it was never reversing back to the other side. And we are going to see this a lot in a lot of examples if you want to. Okay, so today let me show you a simple RSI strategy that you can start using in the market right now, and you are going to make money if you are trading volatility 75 index, mostly because this is where I saw high probability trades happening using this strategy. So briefly, let's talk about what is the RSI. So the RSI is the relative strength index, which is an indicator that helps you to see if the market is overbought or oversold, right? So what do we mean by overbought or oversold? So the RSI measures its values from 0 to 100, right? If the market goes below the level 30, it is considered oversold, which means there's a lot of selling pressure and there's a lot of selling activity was happening in that market, and now it is probably time for the market to reverse and the buyers to take charge. This is traditionally how the RSI was created. On the other hand, right, you are going to see that if the market goes above 70, right, it is considered to be overbought, so it will be considered as the market is overpriced, right? So at that point, most people would think that the market is just going to reverse to the downside, right? So if you trade this strategy like this, you are probably not going to make money in the market. As I told you, as this video started, that if the market is going overbought, it doesn't necessarily mean that the market is going to reverse. Most of the time when the market is overbought, in this case, this is a perfect example, but it doesn't happen always, because when the market goes overbought, it simply means that there's high selling. There's people were willing to buy at overpriced prices as the market were going up. So you never know if the market is going to drop or not, right? So how do you know if the market is going to drop or not? So what we need is to add more layers to our strategy, right? So we want to turn this RSI overbought oversold strategy into a profitable strategy. So we want to add more layers to this strategy, right? So what do we add to this strategy? The first thing that we are going to add, obviously, is the market structure. We want to analyze the market structure, what the market has been doing. So what we want is to identify key levels in the market. And by key levels, there are two types of key levels that you can get in the market. The first one is the support and resistance zone, right? So this is simply areas where the market has been reversing on at most of the time. And then number two, we have supply and demand areas. And these are areas or zones where strong or buying or occurred in the market. But I think for most people, what is easier to understand is the support and resistance zone. Now, what is the support and resistance? As I said, support and resistance zone are points in the market where the market has been reversing, or zones in the market where the market has been reversing. So if you open your charts, you're going to see that there's zones in that chart where the market has been reversing multiple times on the almost the exact same zone. So this is not going to be an exact line, but it's just a zone that we are seeing that whenever the market is reaching this zone, it's failing to break to the downside. And if the market is touching this upper zone, then the market is probably failing to push up and break this zone, which it eventually does here. And then you can see that when the market comes back here into this zone, it also reacted and failed to break past, which means this is a strong zone in the market. Also, this is a strong zone in the market. When the market came back right here, you can see the market also reversed around that zone, right? So if we were to draw this, you are going to see that this market around that zone, it's not exactly on the zone, but on around that zone, when it was reacting before, you can see that it also reacted and pushed to the upside. So why does this happen? This happens in all the market, but especially in synthetic indices, especially on volatility indices, right? So volatility 10, volatility 25, volatility 75, all these indices, they react mostly on this zone that they reacted to before. Why? I don't know. Maybe it's because of the way that they were created. Now I wanted to show you how to place your trades, how to maximize your winning rate, and how to get high probability trades from these zones, right? So what we want to do now is to go back and add the RSI on our chart, right? So what we want is to put the RSI on our chart whenever you are analyzing the market, and then you are going to wait and you are going to see the market reacting from a zone, right? For example, what happened right here is the market has started to react on this zone. You can see the market pushed back, pushed here, made a lot of price action, and then dropped right here. So on this chart here, we have some zones here, but our key zone right now is here because this is where the market has last detached before it made this reversal right here, right? So what do we do now? So what we want to do is we want to now draw this zone, and then we want to wait for the market to come back into that zone, right? So this is going to be our area of value. We want to draw this zone, and then we want to wait for the market to come back into this area, like you can see right now. So as you can see right now, the market have come back into this market right now. Now, this is where the RSI comes to play, right? So when the market comes back into the same zone that you have drawn right here, the way which was an area of value for you, you want to look at the RSI. So if this is happening on the upper zone, which is our resistance zone, right? So if this is happening on our resistance zone, which means we want to say to see when the market bounces from this zone to go to the downside, right? So what you want to do is you want to look into the RSI. When you look into the RSI, you want to on your RSI, right? So here's what you do. On your RSI, you want to look at the first zone that you were touching, right? Which is here, right? And you want to look where the RSI was, right? So if you see that on that zone, the RSI went overbought, right? It went overbought, which means there was a lot of buying pressure, and then the market went overbought. And then you want to look at the second touch on your area of value, and then you want to look at the RSI. If the RSI is below this 70 zone, right? It simply means that there is now less buying pressure than here. So here you can see there was a lot of buying pressure when the market was coming here. You can see even with the chart that it was trending a lot. There's a lot of buying pressure, and the market went all the way to overbought, right? And then the market reverses, and you can see that here this move is not as impulsive as this move right here, right? So you can see that there is less buying pressure here. And also it confirms here on the RSI because it's below the level 70, which means here there's less buying pressure, which means the sellers now have more chances to place winning trades right here because there's less buying pressure on this zone than on this zone. Which, if this happens, the next thing that you are going to do is to place your trade. Now, how do you place your trade? All you want to do is you want to see the first candle that gets into the zone, right? If this is a bull candle, you just want to wait for the next red candle that is formed. If that red candle is not a doji, and what is a doji? If you don't know a doji is a candle that has just a wick and then a body like this, or a very small body like this one, right? So this is not a decision-making candle. This candle shows that there is indecision of either the market going up or going down. But in this case, we have a healthy red candle right here, which shows you that the market will likely have now gained some momentum. And then you can even see on the RSI that the line is going to the downside. So in this case, this is where you would place your sell trade. Once you place your sell trade, you want to put your stop loss above this zone, because if the market was to reverse, you want also this zone to help you to try and push the market to the downside, right? So if you had done this, then you probably have gotten a high probability trade. So in this case, this was also a winning trade because the market also went all the way and pushed to the downside, right? So let me show you another example. So you can see a setup right in front of me right now, and I'm going to explain why we ended up wanting to place this trade right here. Okay, so what happened here is you can see that the market moved to the upside right here, right? As I said, the market moved to the upside right here. It reversed right here. When it reversed right here, we draw the line. So it doesn't matter if you see the line when the market is here. You can see it right now. So you can just draw this line and say, okay, this was the first touch of this support zone, and this might be the second touch of this support zone, right? And then you can see now, if you look at the RSI, you can see that this first zone right here was oversold, was overbought, right? And then the market made a huge reversal. You can see the RSI going all the way to 50. And then you can see another one, the market, the RSI coming back into the level, coming back up towards the level 70. And then on the support zone, the RSI started to reverse also, right? And if you look at this zone right here, this zone is lower than this zone, which means there were more buying pressure at this point, but the sellers managed to push the prices down. Now there's less buying pressure, which means sellers are likely going to also be able to push the prices to the downside, right? So which means you are going to place this exact same sell trade that you can see right here, right? So once that happened, the next thing that happens in this case is that the market pushed to the downside, and then it started going up again, right? So if you look at the RSI, you can see it's failing to go to the downside. So this trade will probably end up as a losing trade. But also you can see how the setup came about, and you can see the market pushing all the way down here. On volatility 75 on the 5-minute time frame, this would probably going to be a lot of money right here, but at the same time a lot of risk with this stop loss. So I wouldn't say you should have placed a bigger trade, but it is what it is. The market will likely go in your direction or against you. Now I've shown you two selling positions, and now I'm going to show you a buying position on how you can take a buy trade on volatility 75 index using this simple RSI strategy. Now here is another example of a potential buy trade, right? So firstly, what do you see right here? If you look at this market right here, the first thing that if you look at here, we are going to see that from where the market is, if we were to draw a support zone, we would draw this rectangle line right here, right? So we draw this rectangle line right here. And what happened next is that if you look at this, where the market is, right? So if you look where the market is right now, you probably see that this is a strong support level, right? But if you look at the RSI, right, the trade, we should have placed our trade here. If we were not late for this, maybe we would have placed our trade right here, right? But then at the same time, this was a good trade. As you can see, the market pushed all the way up, but we were late on this one. So here's another setup right here. So if you look at where this started, right, this area of value started, if you look at the RSI, you can see that it's below the level 30, which means it's oversold, right? There were a lot more selling pressure, and it can be also confirmed with how big this trend is, how big these impulsive moves are getting into the zone. It shows you how much selling pressure they were on that zone, right? And then you can see the market coming back here. There were less pressure. And now the market is now back into that same zone right here. And if you look at here, you are going to see that our RSI is around 40. On here, it was below the level 30, right? And what does this mean? This means that the selling pressure, which is here, is lower than the selling pressure which is here, which means if there were more buyers right here who managed to push the prices to the upside, right? And then if there is less buying pressure right here, if there is less selling pressure right here, it will be more likely that the buyers are likely to push prices to the upside. They have more chances than they had when they actually did that. So it will be a good buying trade, right? So in this case, what you are going to do is you are going to place your buy trades just like this. You put your stop loss below this zone and you take profit. So on your take profit, you can use risk to reward ratio, or you can take profit based on this recent zone. Because once the market comes into this zone again, probably the market will likely want to reverse to the downside. You probably are going to also see some kind of divergence, which is the exact same thing that I'm showing you that you are using to buy or to sell. So if you see it on the other direction, you don't want to be in the same trade, right? So and this is how you would place your trade, right? So in this case, the market went on and then pushed to the upside, came back again. As you can see that it also wanted to come back into this divergence line, but then it was not on this zone. And then after that, the market also pushed to the upside. Okay, that's how simple it is to trade volatility 75 index using RSI divergence and using major levels of support and resistance in the market. If you enjoyed watching this video and if you think that you have learned something new, make sure you leave a subscribe or a like on this video. And also, if you want to learn more, make sure you check out the first link in the description below. You can get more lessons on how to make money in the market.